Hello, everyone. Welcome to today's episode. The goal of today's discussion is to introduce you to the basics of accounting. Along the way, we hope to demystify some concepts and strengthen your base knowledge. A smile would be a credit. Welcome to Accounting Made Simple, your go-to guide for understanding the fundamental principles of accounting. Whether you're a student, a small business owner, or just curious about the world of finance, we've got you covered. What is accounting? So let's start at the beginning. What is accounting? In a nutshell, accounting is the language of business. It's how we keep score, track money, and make sense of financial transactions. Why is accounting important, you ask? Well, think of it this way. If life is a game, accounting is the scoreboard. It helps individuals and businesses keep tabs on their financial wins and losses. To understand accounting, you need to grasp a few key concepts. Let's break them down. 1. Financial transactions. Every time money moves in or out of a business, it's a financial transaction. It could be buying supplies, selling products, or paying employees. Think of these transactions as the building blocks of accounting. 2. Double entry accounting. One of the most critical concepts is double entry accounting. This means that every transaction affects at least two accounts. For example, when you buy supplies, you increase the supplies account and decrease the cash account if you paid with cash. 3. Accounts. Accounts are like categories for your money. You have accounts for cash, accounts receivable, revenue, and expenses. These help organize your financial information. 4. Financial statements. The financial statements are your financial report cards. There are three main ones. Income statement. It tells you if you're making a profit or a loss. Balance sheet. It shows your financial position at a specific time. Cash flow statement. It tracks your cash inflows and outflows. 5. Debits and credits. Debits and credits are used to record transactions. Depending on the type of account, you either debit or credit it. For example, you debit an asset account when it increases and credit a liability account when it increases. Now, why is accounting useful for everyday life? Well, it helps you manage personal finances, make informed business decisions, prepare for tax season, keep track of debts and credits, plan for your financial future. So, there you have it, the basics of accounting. It's not just for number-crunching professionals, it's a skill that can empower you to make smarter financial decisions. Stick with us as we dive deeper into the world of accounting and finance, making it simple and accessible for everyone. One of the primary functions of a bank is granting loans to individuals and companies. But how do they decide who gets a loan and on what terms? Imagine you want a loan to start your dream business. The bank needs to assess your financial health, and they do this by looking at financial statements and credit reports. Financial statements. They'll examine your financial statements to see if you can handle the loan. They need to know if you have enough income to cover the loan payments. They also check your credit report to see if you've been responsible with credit in the past. Accounting helps the bank make these assessments. Investing clients' money banks aren't just places to store your money. They're also responsible for investing your savings to earn returns. How do they make these investment decisions? Imagine you're the bank, and your clients trust you with their hard-earned money. You need to grow it responsibly. What about investment portfolio? You create investment portfolios based on your clients' goals and risk tolerance. Accounting data helps you choose the right investments and monitor their performance. Setting interest rates. Have you ever wondered how banks determine the interest rates on loans and savings accounts? It's all about accounting. Picture this. The bank wants to set a competitive savings account interest rate. They analyze their own financial reports, including their cost of funds and profitability. Accounting information guides them in offering rates that attract depositors and are still profitable. When it comes to regulation, banks are subject to various federal regulations to ensure the safety of your money. How does accounting help meet these regulations, you ask? Well, just imagine you're the bank manager responsible for compliance of a credit union or a retail bank. It can also be a larger investment bank. You rely on accounting data to ensure that your bank is following the rules. It helps you report accurate financial information and demonstrate compliance. There are various standards and formats for reporting in accounting. Let's not forget accounting standards for hedging, FX, equities, and most of all, taxes. We will cover P&L, marked to market, in upcoming discussions. P&L stands for profit and loss. While the mark to market is a process where you reflect the loss or profit for certain financial products, please keep in mind that this is a very basic explanation. The process of mark to market is a bit more complex if you start to invest in financial products called options. As a starting point, we have the International Financial Reporting Standards, commonly called IFRS, are accounting standards issued by the IFRS Foundation and the International Accounting Standards Board, IASB. They constitute a standardized way of describing the company's financial performance and position so that company financial statements are understandable and comparable across international boundaries. These rules are particularly relevant for companies with shares or securities publicly listed. We will cover some of these established standards in another lesson. What we hope you take from this discussion is not only the role of accounting in everyday life, rather the necessity that assets and liabilities create for bookkeeping, investing, retirement saving, and more. Basically, if you are spending money or earning money, accounting is involved. If you are borrowing or lending, accounting is always a good measure of how well that process is working. Accounting is the backbone of the banking industry, impacting how loans are granted, investments are made, interest rates are set, and regulations are met. If you're interested in learning more about accounting or have any questions, feel free to leave a comment or reach out to us. Now let's delve into the fascinating world of granting loans and how accounting is the backbone of this process. Imagine you're in the shoes of someone who needs a loan, be it for starting a business, buying a home, or simply covering unexpected expenses. When you apply for a loan, it's not just about getting a pile of cash. Banks need to ensure that lending to you is a smart and safe decision. That's where accounting comes into play. One of the first things the bank does is review your financial statements. These documents tell the story of your financial health. They include your income statement, balance sheet, and cash flow statement. Income statement shows how much money you're making and where it's coming from. Banks need to see if you have a stable source of income to repay the loan. Balance sheet gives a snapshot of your financial position, including your assets, liabilities, and equity. Banks want to know if you have assets that could serve as collateral or contribute to your ability to repay. Let's talk about the cash flow statement. Cash flow statement details how money flows in and out of your accounts. This helps the bank understand if you have enough cash to cover your loan payments. But that's not all. Banks also pull your credit report to get an idea of how you've managed credit in the past. Your credit score is like a report card for your financial responsibility. The higher the score, the more trustworthy you appear to the bank. Now let's put it all together. When you apply for a loan, the bank's decision-making process looks something like this. If your financial statements and credit report pass the bank's criteria, your loan application gets approved. However, on the other hand, if there are red flags, they might ask for additional information or, unfortunately, decline the loan. So, the next time you apply for a loan, remember that it's not just about your credit score or your charm. It's about the numbers, the accounting data that tells the bank whether you're a safe bet. Please join us next time as we dive deeper into the core standards of accounting, such as bookkeeping, which is the process of keeping track of a business's financial transactions. These services include recording what money comes into and flows out of a business, such as payments from customers and payments made to vendors. There is also cost accounting, hedge accounting. Depending on your development trajectory, learning Excel and other softwares will greatly add value to your learning process. Thank you for sharing your time with us. Have a wonderful day.